Well, good morning, everyone. The American Rescue Plan was just enacted on March 11th of 2021. And instead of American Rescue Plan, you might know this as the $1.9 trillion stimulus bill that Biden signed recently. And with that bill, one of the tax provisions, tax changes, if you will, is in regards to your taxability of your unemployment compensation. I'm going to walk you through what this new unemployment exclusion is, what to do if you've already filed, and what to do if you have not already filed your tax return, and how to apply this exclusion in 2020. Good morning, everyone. My name is Mike the CPA. Welcome to Money and Life TV. If you're new to our channel, taxes is one of the main subject matters we cover here on this channel, so make sure you're subscribed by hitting the red subscribe button down below to stay in tune with any new tax updates. I try to release one new video per week. If you want to support my work and help other people see this video, the best thing you can do is simply leave a like on this video, engage in the comments, and share this with family and friends. Especially if you have family and friends who have received unemployment compensation in 2020, I think they're really going to want to know these rules and how this works. Thank you so much. Now, you might be in a situation where you have already filed your 2020 taxes before this whole American Rescue Plan thing ever came out. If you did, that's okay. The IRS is stumbling, trying to get all these new rules in place and enacted, and same with software companies. But what the IRS commissioner has said is if you had unemployment compensation on your 2020 tax return, don't worry about amending at this point. Just leave it be, let it be. They have your tax return already. They're going to be processing that. And from what I understand, what I've been reading is that they're going to do a calculation and give you the difference. They're going to take into account this exclusion, even if you didn't file your tax return that way, and then send you the difference back in the form of a refund, or it's going to help reduce whatever you currently owe to the IRS. Now, the exclusion itself, the way to get the exclusion is an all or nothing deal, meaning as long as your modified adjusted gross income is less than $150,000, that includes whether or not you file married filing jointly, you should be able to get this exclusion. The exclusion is up to $10,200. Meaning, when it says up to, it means that if you have unemployment income less than $10,200, it's only going to exclude up to that amount. You're not going to get above and beyond that amount. And they look at it per person, as we're about to see in a couple examples. I'm going to show you two quick examples of how this works. It's very straightforward. So let's head on over to the forms, and I'll show you what form the unemployment compensation comes in on, and then what the IRS wants you to do to report it on your tax return, both the income and the exclusion amount. Okay, let's look at a person who's single, and let's look at that example first. Let's just say that Chipper received $15,000 in unemployment compensation. Now, when you get unemployment compensation, it's going to come across on either a federal form or a form from your state. Typically, it's a 1099-G. That's the form. You're going to receive this. This is not something you need to fill out. You're going to get this in the mail. They should have already sent you this. Chipper, in this example, had $15,000 in total in 2020 that he got from unemployment. Normally, that would be all taxable unemployment income. But with this new rule, there is an exclusion of $10,200. So the only difference is, let's go over to the tax forms now. The only thing that Chipper would do differently is on the tax forms, we're on Schedule 1. In Schedule 1, that's where you report the additional income and adjustments to your income. On Schedule 1, unemployment compensation from your 1099-G in total would be, in this example, is $15,000, which we saw on his tax statement, right? To apply the exclusion of $10,200. The only thing that you need to do, and according to the IRS website, and I'll leave a link to the instructions for this that I found on the Internal Revenue Service site to help guide you through this. But you would go to line 8 and type in UCE for, which I believe stands for Unemployment Compensation Exclusion, which is why they advise you to code it that way. And if you have software, I believe the software companies and packages should be up to date now and should be doing this for you. So you're going to see this code here, UCE now, and what it should be doing is it should be backing out $10,200 as the exclusion amount. And that's, of course, because this person's income, Chipper's income, is higher than $15,000. But if his income was only $5,000, let's say, then he can only exclude up to $5,000. Remember, you can't get more than you already have. So that's how that works. That's just a single person. So, but let's look at now a married couple, how that would factor in. It's a little bit different than you might think. Now let's look at an example for a married couple. This example comes directly from the IRS website. And thank you so much for sticking with me on this. I know there's nothing more thrilling for you, nothing more exciting than looking at tax forms. There's nothing else you would rather be doing. So let's continue on with this. There's $20,000 in unemployment compensation for spouse 1, and spouse 2 has unemployment compensation of $5,000. So combined, they're married filing joint, they have $25,000 in unemployment compensation. Now, right away, you're probably thinking, oh, that's cool because we should just be able to take the maximum exclusion of $10,200 and multiply that by 2, right? Wrong. You actually can't do that. The IRS wants you to look at this individually. And so what I mean is we have to start with each spouse and calculate that exclusion amount from there and then move forward. Let's go back to spouse 1 and I'll show you what I mean. Let me pull up their 1099-G. On their 1099-G, they made their $20,000 as we're seeing here. And what you're going to do is you're going to take $20,000. You're going to subtract out $10,200 because $10,200 is the maximum amount they can exclude from their income, which is fine because their overall unemployment compensation is above that amount, right? So we can exclude that. But what about spouse 2 who only made $5,000? Well, we know from spouse 1 we can exclude $10,200. For spouse 2, they only made $5,000 in unemployment compensation, so we can only exclude up to $5,000 and not the full $10,200. So for spouse 1, we were able to exclude that amount plus $5,000. Therefore, our total exclusion that we're allowed to report for this married couple on their tax return is $15,200. On the tax forms, the way that transpires is on Schedule 1 of the tax forms, line 7, total unemployment compensation of $25,000. We saw that with simple arithmetic, 20 plus 5. And then we're going to come down here on line 8. We're going to write in that code UCE for unemployment compensation exclusion. We're going to have a subtraction of $15,200 right here. Therefore, of their total unemployment compensation of $25,000, because of the exclusion, only $9,800 of that is actually subject to taxes. So that's how that works. So for people who did receive unemployment compensation in 2020, I think this is a great exclusion for you. Remember, if you've already filed your taxes and you didn't report the exclusion, don't worry, the IRS is supposed to do that for you. Don't file a superseded return and do not amend. They are overwhelmed beyond their maximum capacity and then some with all these new stimulus bills, all these new laws. So just be patient. I don't know how soon you'll get your refund on that, but it might take a couple months realistically. Maybe it's a few weeks. Just gotta wait and see. Now, I have a whole video. If you want to learn more about taxes on unemployment especially, I have a video on unemployment. I'll put it above my head right there. Should be right there. I'll put that little card you can click on if you want to see in a general sense how unemployment taxation works for unemployment compensation. Now, that, of course, that video was filmed before this new exclusion. There's so many new rules here. As a CPA, I feel like I'm living in a world dictated by Simon. You know, on day one, Simon says the rules are this. Then on the day later, Simon says the rules are this. Things are changing so rapidly. So thank you for sticking with me. I hope to have more tax updates, more information regarding these different tax matters that will affect you as the weeks go on. So be sure to be subscribed. Please like the video if you liked it. Share this with family and friends. Engage in the comments, and that's where I'll see you. I hope you have a wonderful week. Live life uncaged, and I'll see you in the next one, guys. Peace.